It's absolutely flat, 4 or 5 point change on the Nifty right now, not very much going on, 11,462. Well, how are things going to look from here? It's been a spectacular move. Jai Bala of cashthechaos.com is joining us. Jai, thanks very much. Great to have you with us here. Nice looking background, by the way. Just a quick word on the market first, Jai. You know, you've been cautioning the last couple of times you've been on that maybe it's stretched on too far. You should tighten your stops, maybe start to book profits. But it continues to grind higher. I mean, that correction is elusive. What does one do?
Good morning, Prashant. Thanks for having me. That's correct. The market has been doing that, and that's the reason why I said, for the last couple of times, the objective is 11,600 on the Nifty, and you should keep on, trailing the move. But the market is actually huffing and puffing, but it's still continuing to go up, as you rightly pointed out. See, if you look at the international markets, we are at an important crossroads. The call I made in March was that the developed markets are going to outperform the emerging markets, and the indices that held on to the 2018 low will clock record highs. That was the call in March, and the markets did exactly that, and it has done a little more extra. The S&P wasn't expected to clock fresh record highs. It's actually clocked record highs, and it was just expected to push near the record highs. So we are at a point where we need to look at that call. The markets are going to do one of the two things. It's going to either sink and take all the equity markets with it, or it's going to go up together and wait for the emerging markets to catch up. Or put it another way, we are looking at either a bull market that lasts for another couple of years, or the March lows to the current move is actually ending a very big trend. So one of the two is going to happen. We are waiting for further signals. If you look at the dollar index, I pointed out a couple of days ago on Twitter that it's actually showing signs of a reversal, and this is very important because since March, most of the equity markets, not just emerging markets, they've been moving in sort of inverse correlation with the dollar index. And if the dollar index is actually reversing, we could see that unwind trade happening, which we've been waiting for quite some time. The trigger hasn't happened, and the weakness in all probability could come from Europe. Sent last time on 5th of August that watch out for the Spanish IBEX. It's actually already indicating that the March lows are likely to get taken out. So watch out for the Euro stocks index. If it goes below 3,200, there might be a broader problem in the European region, not just Spain. So if I borrow the words of Elisa Doolittle, the bears need to keep, or the bulls need to contain any such negatives to the plains of Spain. So that's the global picture at the moment. And Nifty, I last time said maintain a trailing stops of about 10,880, and the market came to 10,882 and bounced. And then a few days ago, I've traced the stop loss 10,290. Market printed exactly that. Right now, we're moving up the stops for the Nifty to about 11,417. If you can give a little more room, you can give 11,360. But I think it will be prudent to take profits at current levels. The markets are quite stretched, and it's huffing and puffing.
Huffing and puffing, and hopefully not blowing the house down. Jai. Just to come back to the first point that you made, you said it's binary, right? I mean, it could be ending a big move, or it could stretch on for the next couple of years. I mean, just very briefly, if you can just contextualize that for us. Why do you think we're at that place where it could go either ways?
Yeah, very, very important point, Prashant, and I'm glad that you asked that. See, basically, in either of the case, we are looking at a correction that pulls down this markets, that at least partially corrects the May to August highs. That will be either the market will tell us that's either a correction within a bull run, or if it's the start of a new downtrend. So that's what we are looking for, and we've been looking for that for quite some time now. But the trigger levels, including the S&P, including the Nifty, have just come exactly to those trigger points and unturned higher. They haven't actually broken. So we're still continuing to wait for that. And with this in mind, we are trying to, as you pointed out last time also, we didn't want to leverage. We wanted to stick to cash stocks. And the themes have been the stronger themes. Even for the Nifty, I had said stick to specialty chemicals and pharma. they've played out really well. And stocks like Divi's have started to, there are talks that it's going to come into the main Nifty index. And BASF, IOL, Tata Chemicals, even which is in the front line, they're all doing pretty well. And it looks like they're not even ended. So with that in mind, you got to be very cautious of what the market is going to do. So what will be the case for the medium term? We are looking at a short-term, pullback for the market to come through. Whether it remains a pullback or the start of a new trend, that the market has to decide. As Elliottians, we will look at the market whether it declines in a 3-step fashion or a 5-step fashion. If it declines in a 5-step fashion, we'll call that a change of trend.
Jai, morning. Rima here. I take your point that the long-term direction will be decided soon, whether we collapse or we move on and continue with this bull market uptrend. But just purely looking at the Nifty Bank, what are the signs that you're getting? Because you are seeing that bit of a catch-up trade taking place in the last few days.
Good point, Rima. See, the sustenance of this market strength heavily relies on ICICI, HDFC Bank, and SBI not dropping the ball. The structure for the entire banking space is actually quite weak, and many of the stocks are, in a rectangular range from May to August. And they're not, and even when the stocks that are going up and holding up, they're not doing it in a very strong fashion. They are doing it sort of in a reluctant fashion. So the resistance for the banking index is about 23,200. If that gets taken out, it's about 23,800. Yeah, the banking index, even on a corrective basis, it hasn't done enough to push up higher. So there is a little bit of room for the banking index to go up, but it depends purely on ICICI, HDFC Bank, and SBI not weakening. If one of them weakens, that can weaken the whole index because they have very heavy weight in the index. And the important support or the trailing stops for the banking index is about 21,800.
Okay, so the up move in the Nifty Bank is quite contingent on the performance of ICICI, HDFC Bank, as well as State Bank of India. Jai, what about individual trades? What are you recommending for our viewers today?
Yeah, I have 3 ideas, Rima. Actually, I wanted to, I was actually hoping Max Financial wouldn't shoot up today, but it did because I'd already seen this breakout on Friday, and yesterday it was actually flat. So with that in mind, the stock has actually moved up 11-12% already. Allocate sensibly. Don't, although the potential is still there, the stop loss is about 515 for the stock, and I'm seeing it go up to all the way to 833. And I also don't like the fact that there is a news. I usually like stocks where there are no news, and news comes up after, because so allocate sensibly here. That's the point there. And the second stock is the holding company called Bombay Burma. I'm placing a stop at about 1250. This has potential to scale record highs to 2200, but I'm being conservative because of the stretched market. I'm projecting a level of 1900. And Kaplan Point, is actually spiked up to about 700, and it's pulling back. I think the correction is coming close to an end, and fresh record highs are potential here. About 750 in the range, and a stop about 420 is important. And for all these stocks, allow some room for decline, and go in with the probability that you are going to get a little bit lower, and look for staggered allocation at current levels.
Jai, before we let you go, those are specific stock calls. Just a word on precious metals, because that's also been a big theme this year. You're saying, well, maybe they're done for now?
That's right, Prashant. For this leg, it looks like they are done. And in fact, in our last interaction, I pointed out to 2085 as an important level for gold. Gold actually, the gold December futures turned from 2089. So, and the decline looks like it's the start of a multi-week to a couple of months of decline. Although I would have preferred fresh record highs and then the complete move that would have been done from 2015. It looks like it's going to do a multi-week correction and then come back to record highs. So that's the setup right now. But if spot gold were to cross 2015 and spot silver were to cross 28.45, 28.5, I think there's immediate potential for fresh record highs. And those levels will be about 21.20 for gold and about 30.6 for silver.
Jai, thanks very much. Appreciate you joining in with essentially what you're making of the market right now. So be cautious. It may be grinding higher, but Jay is saying that whatever may happen in the medium to slightly longer term, maybe there is a pullback lurking around there somewhere. So tighten stops, take some profits, and generally, tighten the ship a little bit more is Jay's advice. We will take a very quick break here, but here's a daily sort of series reminder, which you can find on Money Control Pros. From Money Control Pros, A's research team. Ideas for Profit gives readers investment arguments for a company. A comprehensive article covers analysis of the company's financials, business prospects, industry trends, and valuations. Go check out Money Control Pro for more.